All right, everybody. Hopefully you can see and hear me okay. Let's go ahead and get class started for this Thursday. I'm going to continue to go a little bit out of order. So we're going to be talking about the final project more than we'll talk about chapter 2. Although I will talk about some concepts in the final project that relate pretty closely to what you will learn in chapters 2 and 3. Especially when it comes to looking at fundamentals. So good news, our child is doing well. By our, I mean my wife and I's kid is doing well. His name is Alexei, and he will be coming home with us tomorrow morning. So hopefully this is going to resolve a lot of the uncertainty about the classes. He is not giving us too much trouble so far. So I'm thinking right now the battle plan will be, until the VCAA says different, that we're just going to resume regular in-person classes at the same time that you're ordinarily scheduled this coming Tuesday. All right. So I think that's the best way to move forward. I hope that it's as helpful for you as it can possibly be. So just go to your originally assigned section at the originally assigned time until you receive, further notice. Again, I think that will resolve a lot of the scheduling conflicts that people might otherwise have with respect to 9:30 classes or classes from 7 to 8:15. But if the VCAA says different, it just really depends on how the school wants the faculty to take their leave. The way I see it is that the current policy seems to be that if a faculty takes leave, he still has to make up the classes at another time. And my perspective of that is, first, it would be a tremendous inconvenience for you students to have to do something like come in on a Saturday. And second of all, that's not actually leave, right? I mean, if the whole point of leave is so the faculty spends more time with his wife and child during paternity leave, then if I have to make up the class on another weekday anyway, there's not actually any additional extra time that the faculty is spending with his or her child. So as a result, let's just plan and spread the word to those who are not here. Let's just plan on meeting back in class on Tuesday at whatever time your specific section is scheduled. And then we were just going to pick up with chapter 2 and proceed from there. I know that there are maybe 7 or 8 slides left from chapter 1. You probably looked at them. They're not terribly complex. I will go over them as well as I see fit during next week's classes. I also had a good question from one of the students regarding the quizzes. And I think the question said something like, well, I didn't do very well. Does it matter? And the answer to that question is no, that's okay. These are practice quizzes. The whole point is for you to test your knowledge. I won't say who that student was. I'm sorry. Gailey H.E., can you mute yourself? Gailey, mute yourself. Thank you. All right. So what you need to remember about the optional quizzes is that if you don't do well, it doesn't impact your grade, but it should tell you that you should study a little bit more compared to what you've studied up to this point, especially given that we're going to have this test coming up in a few weeks. I believe it'll be on March 18th. And it'll be in the week of March 17th, because the first Monday of that week will be March 17th. But the test will be on March 18th at whatever your specific class time is. So if you're from the 4 o'clock class, then your test will start at 4 p.m. and will conclude at 5:15 p.m. and so on. All right. So with that being said, I wanted to turn back to Interactive Brokers and kind of teach you guys a little bit about the website, because you guys noticed that there is this Interactive Brokers Trader workstation, but there is also a website. And I want you guys to use the website and learn how to use the website, because it demystifies some of the more difficult concepts that are related to using the application itself. And so if you're ever in doubt and you're unsure about what you're doing, you should try to use that website. So let me go ahead and share my screen after I admit these three folks coming in a little bit late. And let me see. Yes. All right, folks that are coming in, silence your microphones. Whoever you are, I'm going to mute all of you here. Mute. Okay. So let me share my screen. All right. Hopefully you guys now see that we're in Interactive Brokers. You can see that my VPN is off, so you should really be able to access the website even if you don't have a VPN. They do have Chinese clients. And let's see if I can even remember my account and password. Or maybe I can't. No. Anyway, everything is working as before, so it should seem fairly familiar. Oh, how do I get rid of this? It's been such a long time since I've used the brand new account on this website. Okay, so we're back to where we started, and you can go and see the portfolio positions that we took yesterday. Okay, here's our Apple put, here's our Boeing put, here's Microsoft, NVIDIA, the NVIDIA call, the Walmart call, and then here is our long position in VOO, which is that exchange traded fund. Here's our short position in VTI, which is another exchange traded fund. And here's our purchase of Walmart. Hopefully you guys remember all of those. Here's the short of Microsoft. Here is the long of NVIDIA. Now, good news. Even though I didn't really plan it this way, I guess it's better to be lucky than good sometimes, you will find that the account has actually grown in value a little bit, right? So we started with $1 million. Now we have $1 million, $1,339. All right, good. So that worked out. Our investments are going up. Again, it's not the end of the world if you lose money, but I hope that you guys find some money-making strategies that you can use in the future. So with that being said, you can see that it sort of looks similar to what you see in the Interactive Brokers application. Now, one of the things that I'm going to require you to submit for your final project is going to be a list of all of your trades. Now, this is different than just the positions, okay? Because a list of all your trades can usually be longer than the list of your holdings. For example, let's say you bought NVIDIA and then you sell NVIDIA. In your positions, NVIDIA will then disappear. But if you give me your trade breakdown, then it will show me that you bought NVIDIA and you sold NVIDIA. So that's ultimately what I want to see. And that PDF is going to be something that you will submit to me at the end of the year or at the end of this semester to document that you made the appropriate trades. So I'm going to teach you right now how to get that report, how to download something that shows what your trades were and how well your account performed, because I'm hoping that you guys are going to do your best to make the account grow as quickly as possible. So you can see there are many tabs here, but one of the tabs that you want to hit is Performance and Reports. Then you're going to come down to Statements, and then you will wait for the internet to load. And then you're going to see the activity statements. Now, I encourage you to play around with some of these other statements. They're certainly very useful for various purposes, but you will just come here and hit Activity and hit this little arrow that says Run. Okay. All right. Now, you guys are going to do something that is going to ensure you're capturing the entire duration of your account. So a lot of students, they submit a PDF that has the period daily on it. And very often that PDF will be missing all of their trades. And then they sort of wonder why their grade was not as high as they wanted it to be. The reason for that is because the daily trades are those that are made during the day. So if I get the daily trades for today, it will just include that one day. If you've been making your trades over many, many weeks or months, it's not going to capture the vast majority of those trades. So it will only capture the trades that were made on February 26th. Okay. Instead, what I'd prefer to do is get the custom date range. Okay. And then select the very first date that your account was opened up until the latest date that is available. February 27th is just starting in the United States. The markets have not yet opened. They will open in about 50 minutes. And so you just select the 26th, okay? And then you can go ahead and download, all right? So then it'll download and you can click on it to open it. And you will see, first of all, this is why I try to make sure you guys use your name. See, you have the person's name up here, right? And that's important because it tells you who actually did all of these trades, okay? Over here, you have the return on your account over time. Now, we've only had about a week, and we only started trading yesterday, but the return is, about 0.1%, which actually, if you annualize that, would be pretty good. So at the end of the day, you can see that all of these things are included. All of the trades that you made are included. For example, you've got them here, right? You've got your stocks and your ETFs, and then you've got your equities and your options. All right. And so these are mark-to-market performance summaries. Okay. And you can look deeply into what that means if you want to. These are unrealized and realized performance summaries. We haven't really sold any stocks, so the realized should be perfectly zeroed out, which it is. The unrealized is here. A realized and an unrealized loss just means that you haven't closed the position yet to get the gain or loss from that particular trade. Again, not on the test, but you should be aware of these. It usually matters for tax purposes in the United States because realized long and short-term capital gains are taxed and unrealized short and long-term capital gains are not taxed. All right, so the most important page for you guys is to come down here and note that all of the trades are logged, okay? This, even though I want you to submit the full PDF that I just downloaded, I am particularly going to look at these trades, okay? And these are the trades that I actually want you to discuss in class. So when you're presenting toward the end of the semester, you will want to scroll down to this part here and describe what trades you made, okay? And so we've got our stocks, okay? And we've got our equity and index options right here. And then also we have our currency trades. Okay, so these are all the trades that should be showing up over time. And so if you ever are wondering, like, hey, did I make the right trades? Do I have all of the trades that I'm supposed to have? Well, you can go to Simple Syllabus, and then you can pull up Simple Syllabus alongside with this PDF and see if you can check off that you have made all of the trades that are necessary. Okay. So now I want to go into, and by the way, you don't have to make the trades if you don't want to in Trader Workstation. You can make the trades in the website that I'm about to show you, okay? So here we are. We're back into Interactive Brokers, and you can trade, right? You can do an ordinary order ticket, orders and trades, crypto, options chains, all these, potentials, right? And so all of these assets can be traded from here just in the same way that you trade them from Interactive Brokers Trader Workstations, okay? So first, let's go to order ticket. See, you can trade all sorts of things, right? You can trade stocks, options, futures, all these products. Not all of them you're required to trade, but they are things that you can trade if you want to. Now, the thing is that you're going to need a symbol, okay, in order to actually find what you're looking for. Okay, so let's say I knew a stock, okay, NVIDIA, right? It gives me the option, select stock. And here we are looking at NVIDIA once again. So here again, you can select the quantity. Let's say you wanted to buy another 100 shares because you heard that NVIDIA released earnings. And as a result of releasing earnings, we can expect the stock prices to go up because the earnings have been released. And you can actually see in pre-market trading, okay, you can see the price is fluctuating and there's this positive gain on the stock overall. But right now, the market itself is not open for you. So there's some people that are trading before the market, but they're not trading on the actual NASDAQ, on the New York Stock Exchange or anything like that. They sort of have their own private pools through which they can move money and exchange shares. So sometimes they're called dark pools. That's not necessarily what's happening here. They just have pre-market trading permissions, which you guys will not have because, well, we're just the trial version of Interactive Brokers. If you had a real money account, you could apply for it and you could get it. Okay. So anyway, buy 100 shares of NVIDIA. Again, select market. I can explain to you what limit means in private, and then you can hit submit. Okay. All right, just accept whatever it is, and the order is pending. Okay, why is the order pending? Why is it not filled immediately? Anyone? Anyone?
Because the market is not open yet.
There it is. Good. Somebody is right on top of it. Right? The market is still not open. Okay, it's 9:47. We can expect that this trade will fill right at 10:30 in the morning because it is a market order. It will fill at whatever price NVIDIA is trading for at this time. Okay, and then if you want to see all of our trades, well, here they all are. Right? We've got all of the things that we did yesterday listed right here, just as they were in the trader workstation. Okay. Now, we can go back and look at some bonds. Okay. And some of you guys might find this to be like friendlier. And there's nothing wrong with that. I think it's sometimes easier to look at these bonds. And I'm noticing that this is the trade that I'm missing, probably because the trader workstation trade, we have some internet problems, did not go through because of a slow internet connection. So I want to now, I've shown you guys how to screen US Treasuries, and I actually had people screenshot me some of their emails where they showed me they were buying US Treasuries. And I want to focus on corporate bonds because after all, this is corporate finance. So where do treasuries come from? Okay, before I talk about, even though I said I was going to talk about corporate bonds, let me talk about treasuries for a minute. U.S. Treasuries are United States debt. And the United States and China and most very large countries, they issue debt. And basically what they do is they sell a treasury bond, and the bond is worth $1,000. And they pay some interest on the bond, which is known as the coupon payment. And we're going to study that in future chapters. Now, why do the nations need to sell these treasury bonds? And the easiest way to sort of demonstrate that answer is to look at the United States balance sheet. Okay, this thing is the national debt clock. By national, they mean United States. And it's one of my favorite things to come back to kind of explain what's going on in the world of government economies. Basically, you can see here, this is the United States debt, right? $36.5 trillion. When we talk about the United States debt, it is primarily comprised of these United States treasuries. So every time somebody buys a $1,000 US treasury, that's contributing to the United States national debt. But the United States is a big and wealthy country. So the question is, why does its government need to borrow? Okay. And that's where we look at how much money the government takes in versus how much money the government spends. And so the United States government takes in about $5 trillion a year in tax revenue. Now, I know what you guys are thinking. How is it even possible for somebody to blow through $5 trillion of budget and then somehow still need debt in order to break even? Well, the United States government has discovered a way. They we're going to look at the expenditures in just a minute, but you can see that $5 trillion is not going to be enough to offset the expenditures, which are here, $7 trillion. Okay, so the revenue is $5 trillion. The expenditures are $7 trillion. How do you make up that balance? You issue debt. Okay, and so that's exactly what the government does. It collects money from people like you and I who are willing to buy these treasury bonds, and it uses that money to fund that deficit. In theory, the government hopes that in the future times will be better and they will be able to pay back that debt. Or, and it's not really an or statement. Basically, the idea is that, well, yes, let's say $2 trillion may seem like a large total today to owe per year, but in the future it might not be. So because the whole economy of the United States will ultimately grow and the debt will seem small in comparison. Now, I have to tell you, that should sound a little bit suspicious to all of you. And I have to tell you, that has not been the case, right? Even though maybe that's what the United States government wants to be the case, that hasn't happened. The national debt has not really ever gone down, probably in the past 50 years. So the US national debt has been growing for a very, very long time, and we've now reached 36.5 trillion. And that's why you might be hearing on the news that the United States government is cutting all sorts of government programs. And the reason for that is basically you just can't have this $2 trillion deficit. That's what they mean when they say a budget deficit in the federal budget. It is the difference between the spending and the tax revenue. All right. So because of that, right, the United States government has started this Department of Government Efficiency initiative, where the Department of Government Efficiency is attempting to cut costs. But again, you guys might be able to see that over time, right, 142 billion might seem like a lot, but unfortunately, it's not really going to scratch the surface of what is actually necessary to bring the budget back into balance. So I think then it might be important to kind of look at, well, what is actually happening? Like, where is the United States spending all this money? And you can see that a lot of the United States spending, the biggest portion, is spent on the Medicare and Medicaid expenses of American citizens and residents. And this is just basically healthcare costs, okay? Then there's Social Security, which is similar to a pension plan for everybody. You don't have to work for a specific company to get this pension plan. Everybody, including me, that has ever paid Social Security taxes is technically entitled, well, maybe entitled is not the wrong word, hopes to receive, or is not the right word, hopes to receive Social Security in the future. Okay, also you see the United States spends more money on war than just about any other country, right? In fact, the United States is spending more on its Defense Department right now than even Russia and Ukraine are combined, even though Russia and Ukraine are at war. So this is also a huge line budget item. And then here is a worrying statistic. This is the interest on the national debt. Here is the national debt. Here is the interest on that debt. This is why you buy those treasury notes, right? Or those treasury bonds. The reason that you buy those treasury bonds is because you're expecting to receive a return on that bond. And because you're expecting to receive a return on that bond, well, you're hoping, well, that means that the government is having to pay interest, okay? And that's also an additional expense. So the deeper the government sinks into debt, the bigger this interest expense will grow. You see, it's already more than the United States spends on war, and soon it might be more than what the United States spends on Social Security. So it's sort of a situation where the country can't continue on this current fiscal path, and that's why you're seeing a lot of government programs get cut. Because as you cut government programs, this number is going to get smaller, and as this number gets smaller, the nation can start paying off some of its debts. Okay? Now, some of you guys sort of might be interested, well, does China show up anywhere on here? Well, look, we can go to World Debt Clocks, and you can find all sorts of different debt clocks. Now, the thing that makes them clocks is that they're sort of ticking over time. And, well, maybe it's not going to load because of the VPN. So I was going to show you the China debt clock, but I can't because I guess this thing is not going to load without the VPN. And I can't very well run this Teams meeting because, unfortunately, the VPN the school gives us is very slow, and so it actually will stall out. Okay, so fine. You guys now understand what the U.S. Treasuries give us, right? Where they come from, what they're financing, and why you're able to receive interest on them. But you can also look for things like corporate bonds, okay? And what I would tell you is that, there are some ratings for bonds, credit ratings, which we'll go over in this class. You can select the lowest rating you're willing to accept to the highest rating, things like that. You can also look at, high yield bonds, okay? You can look at investment grade bonds, and you can see that those are sort of different, right? Now, I'm sort of like interested to see what the really junky bonds are, right? So if they're high yield, right, from C to BA1, from D to double B plus, you guys understand how grades work. Obviously, if you're getting a D on your rating, you're not a very safe bond, right? So in finance, there is a strong relationship between risk and return. So if you're an unsafe bond, you're going to have a higher yield, meaning you're going to pay more interest relative to how much money somebody invested. So I'm actually going to do this. I'm going to search 25% minimum yield to worst. Okay, so let's see if this gives us any bonds. Okay. All right, you can see that there are actually 21 bonds that technically have this very, very, very high yield, okay? And the way to read these things, you guys should know that a bond covers the coupon is the interest rate that it pays, and the face value of the bond is typically $1,000. So you might be like, hey, wait a minute, $1,000 bond is selling for $30? Well, not quite. It's selling for $300. In fact, $308.50. I know it sounds crazy, but you just should multiply all of these things through by 100. But what you have here is a list of very, very incredibly high-risk bonds. I would say that if you bought all of these bonds, probably half of them would end up going bankrupt, that you actually, even though they promise they're going to pay you back, you won't actually receive any of the payment to which you're entitled. So which ones are those? Well, you can basically tell by their price. The lower the price, pretty much the lower the likelihood that the market believes they will pay out. So you can click on one of them. You can decide to buy or you can decide to sell. Oh, this one doesn't even have any transaction history. Let me go over to one that is not quite so bad. So in fact, let's just do the high yields, okay? Okay, so let's just pick out one of them, all right? We can sort by the ask yield, which is the yield that you would receive if you paid the price that was being asked. And, we can come back. Let me find one that's a little bit closer to maturity. See, this one's going to mature in November, meaning they're either going to pay up or file for bankruptcy in November. Okay, and so here you should be able to buy this bond. All right, yeah, don't show this message again. And then you can just buy one of these coupons, and you can, or one of these bonds, and they're 1,000 face value. Okay. Let's see, order size Euro 1K. Not actually sure why it's throwing me an error here. Let me go back, because sometimes they're sold in greater batches than 1,000, meaning that in order to purchase the bond, you have to buy, let's say, at least $5,000. So I'm not entirely sure if this is one of those bonds, but let's try buying 10 of these instruments. Order size Euro 10K is not correct. Oh, okay. These guys require you to buy at least 100,000 of these bonds. Man, I don't know if I want to make that purchase, but for the sake of the example, I guess I will. Okay? Yes, yes, yes. Oh, that's fascinating. Okay, no trading permission, probably because they're a European bond. And unfortunately for you guys, we're just the cheap accounts, right? The free accounts. And so you guys actually won't be able to buy these European bonds because they're denominated in a non-dollar currency. But that's okay. We'll find one that that should work. Let's see, WW International, we already looked at that. Maybe this one should. Let's try it. This is Great Britain. Hang on. Let's do, I think I should limit to United States. I think that's the key. Yeah, let's try this. Okay. Let's see how many they originally issued. They originally issued $500 million in these bonds. Hit buy. Okay, got to buy at least 2,000 of them, so upgrade it to 2. Perfect. Okay, so now we've satisfied the buy a certain number of bonds condition. And then if you want to go back and you want to sell that same bond, you will also satisfy the sell that particular bond condition. But you can see that the trades are functioning very similarly to the way that they were actually functioning in the app. All right, now I want to show you guys another function, which I think is probably the most important one for the test, because I will actually ask you guys from time to time to do this on the test. Now, Fundamentals Explorer is something that is available both in the website view and also in the Interactive Brokers Trader Workstation view. On the test, I only want you to use Trader Workstation. But how does it work? Well, let's type in our favorite company, NVIDIA. It gives you a tremendous number of statistics about NVIDIA. So last class, maybe you guys were thinking about what measures should we use to help predict the future performance of a stock? Where can we look to try to figure out which stocks to buy in the future? Now, a long time ago, maybe 100 years ago, everybody would look at things like this, right? They would look at the total revenue of the company, the cost of revenue, the net income, the profit margin, and so on. And in fact, we're going to study these in chapters 2 and 3. Now, why do I say they used to really care about them 100 years ago? Do they not care about them now? No, they still care about them, but it's harder to make money just by looking at the fundamentals. The reason for that is the markets get smarter and they are competitive. Remember that it's not just you out there trading on the markets. It's a whole bunch of very, very smart people in New York and Shanghai and London, and they have very powerful computers. So the minute that something like total revenue changes, in fact, probably within 5 seconds of that number changing, of the next number being reported, the computers, the algorithms, the artificial intelligence, and the automatic trades are already placed. So even if you and I are really good at looking at company statistics, the moment a new statistic comes in, the stock price rises or falls very rapidly to account for that new statistic. So it's not that you can't make money, but you have to sit in front of your computer almost all day. That's why there are professional traders, and try to trade on it almost immediately. These days, the statistics seem to show that it takes less than a minute for most news to be immediately priced into the price of a stock or the price of an option. And that means that basically they even drilled it down to below 30 seconds. From the moment that the news shows up on your screen to the moment you place the trade, basically, if more than 20 or 30 seconds have passed, you're not going to be able to make money on being able to adjust for that good bit of news. So because of that, it's not that you can't make money using fundamentals. In fact, they're actually very, very critical. It's very, very hard for people like you and me to beat the market. Not because fundamentals do not matter, but because it's just so hard to trade on the fundamentals rapidly that the computers are better at it than human beings are. 100 years ago, you weren't trading against the computer. So therefore, you had more of a chance. Now, I want to talk about what Interactive Brokers actually shows when it comes to these fundamentals. Well, first, frequently when you invest, you want to know what a company does. Okay? And so you have an actual description of what the company is. So when you're presenting your project and I ask you, why did you buy NVIDIA? Or more importantly, well, what does that company do? I don't want you to say, well, I don't know what the company does. It just looked really good, so I bought it. You have the information right here, right? It's a full stacking computer infrastructure company. It accelerates computing, et cetera, et cetera, et cetera, et cetera. And you can read an even more in-depth report like this. Okay, so here, what can you find? I mean, you can find its industry classification, which is kind of important. You can see that it has changed over time. You can see how many shares of stock it has issued. Okay. And, you can see that it's issued nearly 25 billion shares of stock. Okay. You can also see who runs the company. You remember I was talking about that there are directors, right? And there are members of the board. And so this is Jensen Huang, right? He is the CEO. He's been the CEO for the whole history of the company. It famously started in a Denny's, which you guys don't know probably, but it's like a fast food or a semi-fast food restaurant that's very common in America. Okay, so he is both on the board of directors and he is the CEO. Okay, you remember in chapter 1, we talked about CFOs, right? These are guys usually with a finance degree. Well, Colette Kress is the CFO. Okay, you also have the general counsel. Okay, so this guy is an attorney. All right, for lawyers out there, Timothy Teeter. Okay. And then you have the executive vice president of worldwide operations, okay, and so on, right? You don't have to read every single one of them, but you can also see here that the first folks that are listed are officers, and everybody else is a director, okay? So you can understand that it's the directors that vote on the officers, okay? So here you can see that the CEO is simultaneously a board of directors member and he is the CEO. So what can happen, and it has happened before to creators like Steve Jobs, is they would be the officer, they would be the founder of the company. But if they start doing well, it's actually possible for the rest of these directors to come together and vote them out of office. Okay, might feel a little bit unfair, and it felt very unfair to Steve Jobs, who used to run Apple, but you can see that it can happen because, again, he's not the only director. Other directors could have more votes than he does. Okay, now ratios we're going to go over, but basically they are, you take one statistic about a company divided by another statistic about a company, and you tend to compare it versus industry. All right. Now, again, this is probably already reflected in the price of NVIDIA, but if you're seeing a lot of green, meaning that it's better than the industry, that's a good indicator for the company. Okay. If you see red, that maybe is not so good. But you can see for NVIDIA, things are much more green than they are red. So it's clearly a company where things are going well. You can find other companies, let's say like Boeing, where things are not nearly as good. Okay. Dividends, these are payouts for holding the company that you guys will learn about as you purchase stocks, because you will see that every 3 months or so, you're getting a certain amount of money from the company you purchased. In this case, NVIDIA is not paying much of a dividend, only 4 cents for every share you bought. But just be aware that those dividends exist, and you can look them up. Not all companies pay dividends, so don't get too confused about that. But if I ask you on the test to look up, hey, what is the last dividend that NVIDIA paid? The correct answer would be 1 US cent. Okay, 1 US cent per share. And that's completely on the table. I can ask you guys what the corporation is paying when it comes to dividends. Okay? All right. Now, here's some, let us say, new things that people really care about. I noticed that when I write recommendation letters, people frequently are not getting a master's in finance. They're getting a master's in sustainable finance or master's in environmental finance. Well, this tab right here is pretty important for that. So it sort of measures the impact that the company has with respect to ESG, okay? Environmental, social, and governance score, okay? So basically you're trying to measure the impact of the company beyond just profits to shareholders. What is its impact on the environment? What is its impact on society? And what is its impact when it comes to its governance? By governance, I mean the people we just looked at over here, right? When we looked at the board members, okay? This is its governance. You can see a lot of these board members here are independent directors. That means that's typically considered a good thing. That means they're not already working for the company, and so they're able to make independent independent decisions about the future. So you can see that in some areas, right, NVIDIA is doing okay. In other areas, it's doing terrible. I'm not sure what its actual ESG controversy score is. I think we're going to get to it in a minute when I look at social sentiment. But you can see that in many areas, it does okay, but in some areas, not so good. Now, I'm personally a great skeptic of this, right? So economists and finance professors disagree all the time. In fact, if you called my wife in here, she really believes all this stuff, right? And she's a professor at Nanjing University. So she really believes in the importance of ESG scores. And I don't really believe that it should be important because we sort of have different philosophies, right? Should the company simply maximize shareholder profits and then let the shareholders decide whether those profits should be dedicated to improving the environment or improving society? That is my view. Or, for example, my wife's view that the company is uniquely positioned and is perhaps too powerful for shareholders to fully control. So can the company use its unique position to actually advance environmental and social causes? And that's kind of what she believes. In fact, a lot of her research focuses on pollution and the environmental impacts of companies. So you can kind of pick her side or pick my side. I'm sort of indifferent on which side you choose. But I can also argue forcefully to you that sometimes these ESG scores, they tend to inspire firms to pursue things that are not the reasons that the firms are founded, right? Because one of the reasons typically that a firm has been founded is to make money for the shareholders. And when you start looking at some of these other things, like your impact on society, however you measure that, you're going away from the original focus of the company, and you're going away from the reason that the shareholders gave you money, which may actually be sort of a breach of trust and a breach of fiduciary duty toward those shareholders, which all officers of the company, for example, hold that fiduciary duty toward their shareholders. All right, now this is a really important part, and we're going to look at financial instruments in chapter 2 and chapter 3. But you can see that we have the 3 big financial statements, right? There used to be the 4 big financial statements. People used to talk about the statement of shareholder equity, but I guess Interactive Brokers thinks 3 is enough. And to be honest, most finance textbooks agree. You can see the income statement here, and you can see that NVIDIA is, doing relatively well. It released its income statement here on January 26, 2025. Okay, and you can see all of its numbers are improving. Now, again, only one red number. This is so rare, guys. Don't get used to it. Most companies do not look like this. But you can see that the growth in NVIDIA's stock maybe is not exactly mirrored, but is tied down, at least in part, to the growth in its fundamentals, right? So you can learn a lot about a company this way, right? You can look at its revenue, all right, and whether it's rising over time. And then you can even look at what people are forecasting into the future, okay? So you've got that, okay? You've got the revenue. You've got the total revenue, which is usually what you get from selling all of your goods, right? The cost of revenue, which is what did it cost for you to get that revenue, typically the cost of creating all of those goods. Okay, your gross profit, okay? Then you've got, some other expenses that you're going to take out. You're going to have your operating expenses, maybe what you pay your employees and so on. And then you're going to get your operating income, right? Which is your revenue or your total revenue minus all these other things that are getting between that revenue reaching your wallet, okay? Then you've got interest, other expenses, you've got tax, okay? You got net income before tax, and then you've got some tax provisions, okay? And then finally, you get all the way down to net income. And for us, we're just going to, this is a complicated term here. But what we're going to do is we're just going to call it net income, right? And so you can see for NVIDIA, they're doing really, really well. They have a revenue. And again, how do you read this number? This is important. 39.33K. That means 39,330. Okay, but 39,330 what? Everything here is in millions. So if I take 39,330 and multiply it by a million, I actually get $39,330,000,000. Okay, that's its revenue. And then as a result, its income is about 22 billion. Hey, that's pretty good, guys. That's really good. And you can see that you can actually get the income and the earnings per share, okay? So you can get the dividend per share, all right? You already know that number from the other tab. And then if you go back to the overview of the company, go find how many shares the company has and divide this 22 billion by that number of shares, you're going to see what the income is. And they actually do that here for you, which is the diluted earnings per share. Okay. And so then what the company does is it makes a decision, how much of this 0.89 should I distribute? And NVIDIA made the decision to only distribute 1. Okay, 1 cent. All right. So basically, the company is holding on to its cash for future investment projects. Okay. So it's completely fair game for me to ask you on the test, hey, what was the total revenue for NVIDIA in July 28th of 2024? No problem. You enter in. So let's start from the beginning. You enter NVIDIA. Okay, select stock. Go to fundamentals. Go to financials. Go to total revenue. Go to July 28th, 2024, and you enter 30 billion. Do not enter 30,000. That will be wrong because, again, even though it's 30K, it's 30K in millions. Okay? Now, the balance sheet is actually very similar. So whereas the income statement basically captures what has been happening over the past year or over the past quarter and so on, what you're going to see for the balance sheet is you're going to see that it captures a snapshot of the company at that particular time, right? So if you look at NVIDIA, you can see exactly how much cash it was holding as of yesterday, right? So it posted its balance sheet, or its balance sheet, was available as of February 26, 2025. That's its cash in equivalents, right? These are its short-term investments, okay? Accounts receivable, how much money do people owe to NVIDIA, and so on, okay? The total assets of NVIDIA. Now, again, we'll talk about these are the book value of the assets, but it's a little bit different than the market value of the assets. But technically, for an accountant, this is, good enough. Total liabilities, okay? That's how much the company owes to other people, okay? And so on. So we'll talk about all this, and you should have already talked about all of this in your accounting classes. But what I'm hoping you guys are seeing is that these things you talked about in Accounting 2200 actually reflect almost perfectly in real life trading, okay? People are making actual real life decisions about the company based on these numbers, okay? They're making actual real life decisions about the company based on these numbers. So, and by the way, just remember for the balance sheet, you can get a quarterly or you can get an annual, okay? So you can see they're annualized here, okay? Now, that's the quarterly, that's the annual. For the income statement, you got the same thing. I tend to look at the quarterlies because, well, the more subdivided information I can get, theoretically, the more informative it can be for me. But you can also look at the annual if this thing ever loads, right? And you see at the annual, you aggregate it, okay? So you see the annual is 130 billion. Okay, 130,000 millions, right? Whereas if you go to quarterly, right, it's only about, ironically, a quarter of that. And so basically, if you add these guys up, if everything is functioning well, then you should reach this annual number of total revenue. So when I asked you on the test, am I asking you quarterly? Am I asking you annually? Well, you can see that for NVIDIA, right, the annual returns come, or the annual income statements come in January. So if I'm asking you for something in June, all right, or July, obviously I'm looking for something in its quarterly statements. Okay, statement of cash flows. Again, we're going to discuss these. It's here you finally do see some red for NVIDIA. These things are a little bit hard to understand unless you perfectly understand balance sheet and income statements. so I'm not going to trouble you too much further with it. I'm just going to move on to the next fundamentals tab. So you guys might be wondering, like, well, aren't there professionals that make predictions about how the stock is going to perform? And the answer is yes. They're called analysts. So these are individuals that my wife actually studies a lot as well. So just to mention her one more time, she focuses on analyst ratings and how they relate to pollution. So one of the things that you can see here is that the consensus, or the average for the analysts, is to predict a buy for NVIDIA. Okay. In fact, the average analyst, I guess looking a year out, is from what I could tell, are predicting a price for NVIDIA of $175. Okay. Some people are going up as high as $235 a share. So you can see that if you were just going by the analysts, right, you would buy this stock. Okay. Now, you can get the analysts from Refinitiv. You can get them from a different source if it ever loads. So TipRanks ratings. Okay. All right. Look at that. Okay. A high target, an average, and a low. It's a win-win, right? According to these guys, there's no way NVIDIA goes lower. Things like that. Now, again, I caution you, even though it might feel good going with what the analysts predict, right? Look, if all these smart people predict 178, how can they all be wrong? Well, remember that there are people that do care about what analysts think. And just so you know, the price of the stock incorporates other traders reading these forecasts and deciding 134 is correct. So I'm not saying don't trust the analysts. Just know that in the same way that a piece of news about its revenue comes out and is incorporated in the price of NVIDIA within 30 seconds, something very similar is true when it comes to the analysts. But you can really have just a field day on this page. Like, look, you got the analysts themselves. You can look at the, profile of the analyst, all these other things, right? You can see how good these analysts are and whether following their advice overall would have you a good return, right? I mean, average return of this guy here, where was the guy with like 30 or something? 39, that's pretty good, okay? Let's see, 10, maybe not as much, right? So you can pick the analyst that you believe in is going to be the best, okay? You can, again, come over here for TipRanks sentiment, okay? Again, very, very, very similar. And then you've got Morningstar ratings. Morningstar is a website very similar to MarketWatch, where they kind of evaluate stocks and kind of try to predict their future performance across a variety of factors. So just a wealth of information available for free for you just with a free account on Interactive Brokers. Okay, so these are analyst ratings. All right, analyst forecasts. Now, what these guys over here were forecasting were the price. Okay, there are also analyst forecasts for what the company will report on its income statement, on its balance sheet, right? So remember, we were looking for earnings per share. Okay, well, here are analysts forecasting earnings per share. Okay, net income before tax, the same, right? All these analysts are trying to give you a forecast. And typically, when the stock ultimately reports its earnings, for example, right? If it beats on something like earnings per share, the stock price tends to rise. If it goes below what the analysts predict are the earnings per share, well, then the stock price tends to fall. So it's not good enough for NVIDIA to simply increase its EPS, which is earnings per share. NVIDIA, in order for its stock to climb, should technically outperform the expectations of the analysts. Otherwise, if the expectations are exactly correct, the price technically should not move because that means those expectations are already priced in. Okay? Here's a cool tab. Okay, you want to know who owns NVIDIA? Okay, well, you can see that there are plenty of institutions that own it. Vanguard, BlackRock, you might have heard of it. Okay, then you've got some people that own it, you know? So it's kind of cool because the CEO actually owns almost 4% of the company, which doesn't sound like a lot, but it's actually a lot. And he actually owns more than a lot of really, really bad, I mean, not really, really bad, really, really big, although they may be bad, really, really big institutions that own NVIDIA. Okay. So you can also see like, hey, who typically owns it, right? Is it investment managers, funds, brokerage firms, things like that, right? You can also see who has been trading the company. Okay. You can see that people are buying or selling, and you can also see how many millions of shares they're selling. So this is a good way for you to kind of rate whether the sentiment is positive of the company or negative of the company. Are really, really smart people, really, really experienced people buying the company, or are they selling the company? This is where you come for all that. Okay. You can look at institutions. All right. So, this is like BlackRock, right? Or you can look at insiders, and insiders are like the CEO. Okay. Here is the CFO. All right. See, she is selling shares. Here's the lawyer, right? He is also selling shares. Here's the CEO. He is also selling shares. So the insiders basically think the company is a little bit overpriced. Otherwise, they wouldn't sell. But that's okay. Sometimes even the insiders are wrong because even they do not know everything. They may not accurately predict the potential of the company. All right. Now you can even look at things like social media, right? So you've got tools that measure, well, what are people saying on Twitter? Okay. And so it's kind of funny with Elon Musk buying the company, but a lot of the stuff there really can measure how well a company is going to perform in the future. And I'm sure, even though I haven't personally run the regression, if you take the sentiment score and you regress it on the stock price, I'm betting there's going to be a positive correlation. So if you've got a good high sentiment score, good for you. Probably the stock price is high. If you got a low sensitive, if you got a low score on Twitter, probably it's going to be low. Okay. You can also look at short selling of the company, and you can see that there isn't much short interest at the time. Now, this is why I had you guys take a short position. Okay. This is what, you would be, if you were trading with real money, you would actually be reflected in this ratio here. Okay. But just know that a very, very high number of shorts may imply that people are thinking the company is going to go down. Okay. All right. So you've got all sorts of additional tools here on Interactive Brokers. Okay. How many people are lending their equities? Believe it or not, you can actually let people borrow your equities, and then those people can short them. All right. You've got all sorts of these other tabs that I encourage you to explore, which I think probably will be unavailable for the free version, but you can see they're new. The whole point is that there's just a tremendous amount of resources here under the fundamentals tab that can help you make decisions about which stock to buy. All right. I'm not getting any of these to work, and I'm not sure if it's because the internet is slow, which is my prior, this is my null hypothesis, but hopefully you guys on your end with the campus internet, see, I'm at home, with your campus internet, you can get it to work. All right. So this is kind of like my overview of Interactive Brokers. Okay. I'm going to basically complete it now, but in case you guys are wondering, right, like how do I pull up the fundamentals tab in the actual application? I'll show you. Typically, continue login. Typically, there is a tab at the top left of the application. Oh, good, the thing did finally load. Look at this. Okay, you guys get all sorts of tools just for free with Interactive Brokers. So what you want to do is you want to go to New Window, and then one of the choices for the new window within the application will be Fundamentals Explorer, and it will look exactly like this, except of being in white, it will be in black, right? Instead of having a white background, it'll have a black background. And so that's that kind of, here we go, market connection loss. That's how you know the thing is coming online. So just to show you guys, new window. So when you're sitting there on the test, well, I keep clicking new window. I keep promising that the thing is going to work, but with 100 of you or so on the chat, maybe it's not working as well as it normally should. But you would click the new window, and then it will give you a drop-down menu, and then you can select Fundamentals Explorer from that menu. And you will find that not all of these companies have, the ideal fundamentals that perhaps we would want them to have. Okay. And by the way, in case you're wondering what a corporate bond purchase looks like, remember we bought this bond earlier. Okay. There it is right there. It's showing up in the come on, Interactive Brokers, you got to load for me here. It's got so many pages it's trying to load, like the daily lineup, that it's not. There it is, finally. Here's Fundamentals Explorer. You guys see it? There it is. Go. But this is where you type in the stock. Okay, select stock. All right, and this should look almost identical to what we were looking at before, right? Here is social sentiment, right? Here's ownership. No data to show. Oh, come on. Reload. Here is some news about the company. All right, here are the analyst forecasts. And again, they are there, I promise. It's just the internet connection is not good enough for me to display them for you. Okay, so make sure that you go through and you try all this out. Oh, hang on. Actually, I know what the issue is. Let me type it in one more time. Okay. NVIDIA stock. That's key. All right. Let me come over here. Okay, now we're back, right? We've got ownership. We've got all those tabs. So just make sure that you guys are comfortable with it, you know how to operate it, so that if I ask you, anything about its financials, anything from the January 28th revenue or something like that, you're able to find it. All right. So anyway, this kind of completes my Interactive Brokers tutorial, I suppose. I am very, very open to questions about it. I think it's a fascinating platform, right? When I actually started trading, I was about your age. I was 21. And I didn't actually start with Interactive Brokers. I started with some other service. I believe it was E-Trade. And I think E-Trade doesn't even exist anymore, but Interactive Brokers has really stood the test of time, and it's widely recognized to be basically a semi-pro trading platform. And there are some people that actually run their businesses, their financial advising businesses off of it. So again, not the only platform, not necessarily the very best one by everybody's opinion. I think it's the best one. That's why I introduce it to you. Now, you guys should also be aware of an additional resource all of you have, which are the Bloomberg terminals. Okay, I do encourage you guys to use those. And I'm not saying that Interactive Brokers doesn't have any of the information on Bloomberg. What I'm saying is that Bloomberg is also used by most professionals on Wall Street when they trade. And what I would encourage you to do is go and find, again, it's not for a grade, but it's for your own personal growth. Go and try to find the differences between what Interactive Brokers, for example, is offering you about a company and what Bloomberg is offering you. And then you guys should know we pay about $50,000 per month for that subscription for Bloomberg. So go over there and try to use them because we want to make sure we're getting our money's worth. All right. Okay, so I'm going to end the recording. I'm going to stay behind for any questions that you might have, unless anybody wants to ask them while we're still on video. But please spread the word that I'm planning to just be back in the classroom at our regularly scheduled times starting on Tuesday. And my office hours will also return to their original scheduled times until further notice. All right, let me stop the recording right there.